Hello, 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 everyone, and welcome back to Sipping Wealth Live. So I am back with a brand new topic here to bring you news, tips, and tricks on how to wealth up. Hey, y'all. For those of you that are tuned in with me, be sure to hit the subscribe button on the YouTube channel, Sipping Wealth, and the notification bell so that you don't miss out on any Sipping Wealth lives. And for those of you that are tuned in with me, two things: share this as well, and go ahead and drop a comment in the comment section. Say, "Hey, girl," let me know who's tuned in with me. Yeah, say hello. Hey, y'all. So today I am going to go over S-Corps. So as you may know, the S-Corp tax deadline and partnership deadline is this Friday. So if you haven't filed your S-Corp tax return or partnership tax return yet, you literally have until the end of this week. Also, for those that want to convert their entity into an S-Corp, hey. For those of you that want to convert your entity as an S-Corp for this year, for 2024, you have until Friday to make sure that paperwork gets over to the IRS before the end of this week. If you wait and you say, "Hey, I want to be an S-Corp for 2024," and you don't submit that paperwork, then you're going to have to submit an appeal and hope that they are able to, actually grant you the ability to be an S-Corp for this year. So make sure you get that paperwork in. Partnership S-Corp people that are already structured that way, you have until Friday to get that tax return submitted. So today I'm specifically speaking to those that are considering an S-Corp that are like, I don't know, I've heard a bunch of information about an S-Corp and I'm thinking about doing it. I don't know, should I do it? Should I not do it? So I'm going to go over that today. I'm going to go over some reasons why an S-Corp is beneficial and some reasons why it may not be beneficial for you. Okay, so stay tuned, y'all. For starters, I'm going to break down what it means to actually be classified as an S-Corp. So when you're classified as an S-Corp, it's a tax election. So you don't change your status with the state. So the state will still see you as an LLC, or they will still see you as a corporation, depending on what entity structure you chose. On the IRS's side, you can elect to be treated as an S-Corp, which essentially stands for a subchapter designation. So instead of being taxed as a corporation, we're going to give you the subchapter designation, which means you're like a small corporation, and we're going to allow you to operate in that. You don't have many shareholders. Your shareholders is under 100, a certain amount, under 100. I'm going to break it down later. And you're going to be an employee of the business. You are no longer self-employed. Okay. Which I'm going to continue to break down later on as far as this, because a lot of people will jump in there and get an S-Corp and they can't afford to put themselves on payroll. Well, you shouldn't be an S-Corp, because one of the requirements in order to be an S-Corp is actually putting yourself on payroll, because you are no longer self-employed. You are employed by the business. So you want to make sure you have enough money in the business to be able to fit that bill of putting yourself on payroll. There's a lot of people operating their S-Corp without putting themselves on payroll, and could get messy. All right. So the S corporation is a pass-through entity. What that means is the S corp in itself does not pay taxes. Okay. The S corp actually, it just collects data so that it transfers the information to the party that's actually paying taxes, which is the owners, the shareholders. So if I'm the owner of an S corp and I'm the only owner of the S corp, I'm gonna do an S corp tax return. The S corp, like I said, is a pass through entity. So that S corp tax return is just going to collect data. It's going to collect the income that I had with that business, the expenses, losses, credits, all that good stuff. But I won't actually get a refund or pay any taxes with the S corp. What's going to happen is I'm going to receive a Schedule K1. It's going to be a form that I'm going to receive from my S corp tax return that I'm going to now put on my personal tax return. And this is a reason why you have to make sure you file your business taxes, your S corp or your partnership taxes before you file your personal taxes. A lot of people make that mistake as well. So you want to make sure you file again. Make sure you file your S corp or partnership taxes before your personal, because you're going to receive this form called a Schedule K1. You're going to then put that K1 on your personal taxes, and that's how you're going to then pay your taxes for your business through your personal tax return. Okay. All right. So it's a pass through entity, which this could be advantageous because because it's now passing through a to the individual now, and you're now a employee of the business. You do have the ability to now take that salary as a deduction because the business is paying an employee. So that entire payroll is a deduction. Now, when you get that W 2 from your S Corp, you are paying your normal W 2 taxes and everything. Your S Corp already took that deduction, but on the S Corp side, you're not paying self employment tax anymore. So you don't have to get hit with that 15.3%. So generally, a nice rule of thumb, if you should consider being an S corp, is hey, after expenses for the year, do I have more than $50,000 left over after expenses? Oh, I do. Okay, let me go ahead and consider doing the entity conversion, because if you say have that 50,000 left over net income, and you're like, oh, now you're having to pay self-employment tax on that amount. Now you're having to pay self-employment tax of almost $8,000. Now half of that can be avoided by just being an S corp. So you can save almost 4,000 for that year by just converting the into an S corp. Now, on that other end, that 4,000 that you're saving, let's say to run payroll for the year is costing you 2,400. So you save $4,000. It's costing you for 2,400 to run payroll for the year. Now you're left with $1,600 in savings. It's not a huge savings, but it's still a little bit of a savings for the year. Um, as far as why as a good reasoning as to why you switched over. Now, for those that maybe they netted 20,000 for the year, and they're like, oh yeah, after expenses, I made $20,000 in my business. Well, it doesn't make sense for you to be an S corp at that time because one, you don't have enough money, a margin big enough to actually put yourself on payroll. What are you going to pay yourself? $5,000 for the year on W 2? No, that doesn't make sense. But let's say that person, they've netted $20,000 for the year. Now at $20,000 for the year, they're saying, "Hey, I'm thinking about switching to an S corp. Let's do the math. 15.3% of $20,000. That's $3,000. Half of that, like I said before, half of that can be avoided by just switching to the S corp status. Now, half of that is now $1,500. $1,500 is costing you $2,400 to run payroll for the year. You didn't save any money. You can't afford to run payroll. You can't afford to put yourself on payroll nor run payroll. So switching to an S corp by just netting $20,000 for the year does not make sense. So that's why a good rule of thumb is saying $50,000, more than $50,000. If you could make it past the 50K mark after expenses, then okay, we can talk. Let's talk conversion. Anything under that does not mathematically make sense. It's not a savings to you. You're going to end up spending more money is trying to stay in compliance, and that doesn't even account for the cost of doing a S corp tax return. You need to make sure that you have a knowledgeable, experienced tax professional doing an S corp tax return. Tons of tax preparers, fly by night tax preparers, H&R Block, they got you when it comes to Schedule C. They're like, Schedule C, they may not, need to put in the depreciation. A lot of times they don't even do that. But maybe they just putting on the expenses and income on their Schedule C, they're done. But because S corp tax returns, you have to count bases. You have to, there's other things that go into it. You want to make sure. So now, because you have to make sure you have a specialized professional to do your S corp return, you're not paying $300-$400 to prepare a S corp tax return. So now you're looking at the preparation fees for an S corp return being $900, $1,500, $1,600, whatever dollars. So you want to make sure it makes sense and that you're actually ready to do this conversion and stay in compliance under the S corp status. Also, while I'm speaking, if y'all have questions, let me know. Don't be shy. All right. Dividend payments. So, so within S corp tax, S corp shareholders can receive W-2 income, and they can receive dividend payments as well. So because of that status, and then you can have owner's draws. So these are great ways where you can have deductible expenses, give the owner shareholders additional revenue, and take deductions on the business end to decrease the tax on the business side. Okay, so and then other shareholders. So maybe I own an S corp with multiple people. Maybe it's 3 of us, 4 of us that are shareholders of this S corp. That's a huge incentive as well, being able to take salary and dividend payments. Asset protection. So like your C corps and everything like that, S corp does provide you limited liability protection as well. So your personal assets, and this is only for those of you that do not mix and mingle. Hey, Joanne. Hey. I won the getaway. Oh, yeah. Yes, you won. Congratulations on winning. I did a raffle for those of you that did it, that don't know. Quick intermission. I did a raffle for $50 gift card. And Joanne won. So yes, tune in for our next gift raffle, y'all. So make sure that you are following the Strategic Tax Accountants page so you can win. Okay. Is it possible to convert into PayPal? Because so it will actually be electronic. But yes. Whoever is messaging you through our social medias, either Sierra or Jared, they'll be able to get the information from you so that we'll be able to get you the gift card. Yes, it'll be an e-gift card because, this day and age, we don't have physical anything. All right. Okay, hop back in. Intermission done. Okay. Asset protection. Yes. So for those of you that are actually keeping your personal and business expenses separate, expenses, income, all that, this is where the limited liability protection really helps. For those of you that are co-mingling, you just remove that veil. So that limited liability protection that you wanted to open an LLC, you wanted to open an S-Corp for the limited liability protection, well, because you co-mingled, you just remove that veil off and you're exposed because you co-mingled your personal and your business assets and everything else together. So you want to make sure that you're separating separate bank accounts. You're paying yourself separate from the business. You're not swiping your card to go pay for your dog's doctor visit. You're not swiping your card to go to the nail salon, to go to the spa, whatever the case may be. you want to make sure that you're keeping your business and personal separate because you can't get hit. All right. Next thing I'm going to touch on is the credibility. So when and lendability. So when an S corp is applying for certain um, loans, grants, things like that, it does kind of give more credibility to vendors, partners, things like that, because you have to have more compliance and structure in order to be an S corp. So for my clients, we actually give everyone that we do an S corp conversion to for, we give them an entire compliance guide, so you can make sure that you are abiding by all the rules and everything like that to actually hold the status or keep your status going on the for the S corp and take advantage of everything that the S corp has to offer. Estate planning, stock transfer. S corps can be super beneficial when it comes to estate planning. Huge, huge, huge. It is so much easier and more effective, a lot cheaper when they talk about buying and selling their business to their heirs, having to avoid all that inheritance, this and that. When you're just selling stocks, you're just selling shares of the company to your heir or something like that. It makes it a lot more fluid, a lot the transaction, like I said, cheaper when you're doing some estate planning with your S corp versus a regular sole proprietor, single member LLC, something like that. Um, on the tax side, because a lot of people just go and switch to an S corp, because of that tax savings, because they don't want to pay self-employment tax, things like that, and a lot of times people are not putting themselves on payroll. It The S corp does have a higher chance of an audit, but honestly, if you are making sure that you are in compliance and you are keeping your business and personal expenses separate, then you don't have anything to worry about. I tell my clients, if an audit comes, an audit is not the scariest thing. It is not scary because audits can be easy, quick, closed case. If the IRS says, "Oh, you have a vehicle expense on here, and we want to know, we want to see the receipts or deductions from the vehicle expense," okay, you give them the paperwork, case closed. They go about their merry way. Audits can literally be so easy, stressless, like, but and I know it sounds scary, but it's really not. It's not. Just make sure that a lot of people are scared of it because you ain't got your stuff together, right? But if you're in business, you do business the right way, it makes it a lot less stressful, y'all. And you get to take advantage of so much more by just doing it the right way the first time. Or just if you haven't been doing it the right way until before, then just switch. You can do it the right way now. All right. The other is actually paying yourself a W-2. So I want to go back on that paying yourself W-2 payroll. So you have to pay yourself reasonable compensation, meaning if you have to kind of look at the industry that you're in. If you are I'm going to use myself. I'm an accountant and I'm paying myself out of my S corp. I'm not going to sit here and pay myself $5,000 for the year and say, "Oh yeah, that's a reasonable compensation," and then I'm going to take the rest in owner's draws and dividends. And I'm going to give myself $20,000, $50,000 in owner's draws and dividend payments. No, the IRS is going to be like, "No, you're trying to take advantage of us. You're not paying any um, uh, taxes on that. You have to do reasonable compensation." So, but you can say, "Hey, I'm going to pay myself $50,000 for the year, and then I'm going to take $30,000 in dividends and owner's draws." That's okay. That's reasonable. And also, just depending on your industry and everything like that. You don't have to pay yourself a ridiculous, like, "Oh, I got to pay myself $150,000 for the year in W-2." No, you don't. You can pay yourself 80,000 and take 50,000 in draws and dividend payments. Okay. Um, The last thing I want to touch on is retirement planning. So, oh my gosh, retirement planning is so much fun with an S Corp. So, for those of you that have an S Corp, I know like some of my clients that I've been communicating with, and I've seen their growth over the years, things like that. And I'm like, hey, we need to make sure that you have retirement plans with it embedded into your S Corp because it's probably the one of the greatest ways of funding your retirement. And you have such a higher threshold with funding your retirement. You have a portion of the profit sharing. You have profit sharing with your retirement, so you can actually fund your retirement with, based on a percentage of the amount that you made for the year. You can add in a uh, uh, 60,000 in addition to your on top of your retirement plan. You can add, depending on the different ones. There are different ones. I'm just giving an example. You can add an additional. There's one that you can add an additional 25,000 to your retirement plan, depending on, and this is all through your business. So setting up these retirement plans through your business, defined benefit plans, things like that, which are just different types of 401k plans that you can set up through your business, which is deductible as a business. So not only does your business get to take that deduction, um, you're funding your future. So in the future, you'll be able to have that money to do whatever you want, and within your retirement plan, you can invest in other things and grow your retirement fund. So you don't necessarily have to invest in your traditional portfolio within your retirement plan. You can say, hey, I want to purchase a real estate property or a business with the money that's in the real estate that's in my retirement account, and that's okay. You just have to have a self-directed plan. But yeah, there's so many possibilities, so many things that you can do when you have an S corp, when you're an employee of your business. Is making sure, um, and I didn't even touch on adding your kid, on paying your kids. Generally, you don't want to pay your younger children through your S corp. For those of you like, hey, I want to throw my kids on payroll. So kids under 18 years old or 17 years old, you don't necessarily want to pay them through your S corp, but you can through like a regular single member LLC. But that takes more tax planning. But yes, those are the things I wanted to make sure I hit on. For those of you that do have questions, things like that, be sure to reach out to us at Strategic Tax Accountants, book a strategy session, however we can assist. I know this is quite a bit of information, a lot to take in, but feel free to reach out to us, book your session, and good luck with these tax deadlines coming up. Again, Friday is a huge day. But yes, for those of you considering S Corp status, rewatch this video, check out this video, set up a strategy session, and we can talk about your situation specifically. All right, y'all. Okay. Okay. Oh, so if you DM'd on Instagram, um, yeah, they should reach it back out to you. Um, Yes, they'll reach back out to you on the direct message. So if y'all send any DMs and things like that, my team will make sure that you responded to, at least Monday through Friday. Because on the weekends, they're not there. And a lot of times I'm not looking at it either. But yes, have a wonderful, wonderful, awesome, amazing. Thank you. Thank you for tuning in, Joanne. All right. Have a wonderful evening, you all. Be sure, like I said, to follow, subscribe to the Sipping Wealth YouTube channel, and have an amazing, awesome rest of your day. And don't forget to wealth up.